Builders are imploding as there's a total of $644 million that are being put into receivership in total right now. Behind this massive implosion is Kingsett, who lent out this $644 million and put all the developers it lent to into receivership in an attempt to try to get their money back. Right now, it has gated its $4.9 billion fund, which means that investors who invested their hard-earned dollars with Kingsett as part of this $4.9 billion aren't going to be able to withdraw their money until December 2025, which means that they're not getting any money back, they're not getting distributions, which is kind of like yield and dividend equivalent. So that is a big yikes. And this is just what's reported so far on the surface, right? Because of the $644 million that Kingsett lent out, these builders may ring a bell for you. The recipients were Stateview, the alleged check-kiting scandal builder. Then you also have Vandyk, who has a few big projects in the GTA and now are also under. And now you have Flynn, a fairly sizable builder in British Columbia. That's a lot, right? And all of this is just to show you that there are problems in the development space right now. Kind of loosely call it. And why, if you think there is going to be more homes being built, anytime soon, let alone start, think again. Yeah, it's not. And you can kind of connect the dots as to why Kingsett gated its fund and temporarily halted any withdrawal of the money. Because if everybody asked for their money back at the same time because of, a loss of confidence, it could be catastrophic for that fund and whether there's enough money to pay it back, allegedly, right? We don't know, but it makes sense. So all these problems in the development space are kind of slowly and surely, and I keep talking about it, sowing a potential big new product supply shortage in the future, say 2028, which feels like forever from now because we're in a lot of poo-poo. But from here until then, it could be a lot of poo-poo. But I think after then, we're not going to have enough supply. Like, it's obvious right now. And just because rates are going down now doesn't mean that the damage hasn't been done, right? Because the time under tension, like these high rates for a lot of these builders, has been causing way too much damage, and you can't get back and return to form from all this damage. And we're just starting to see the damage surface now publicly, right? Because remember, the receivership process takes time. So I really would not be surprised if there's going to be more reported builders that are in trouble to come, call it in the next year or two. My name is Zen, and on top of making awesome educational content just like this one about real estate, I also run a RE/MAX in the Greater Toronto area where we help our clients buy, sell, and invest. So what does this mean for the everyday real estate owner or watcher or bystander? Well, it means that the supply pipeline is going to dry up really, really fast after 2025, 2026. Whatever we have that's currently under construction and being built right now for ownership purposes, not purposeful rental, for ownership, you can buy it and own it, will kind of be the last of it for some time, especially in the condo space, right? If you look at these numbers here for new condos and homes for sales last month, you can see that we're down 77% from the 10-year average for all home types, so condos and freeholds. For just freeholds, it's not that bad. It's down 45% because stuff is still selling out because people want low-rise homes. And just for condos, it's down 91% from the 10-year average. Yeesh. Yeah, good luck trying to build 1.5 million homes in Ontario by 2031. Yeah, ain't happening. That math ain't mathing. Yeah. Bye-bye affordability. Makes no sense, right? And if you enjoy this content so far, make sure to do me a favor and like and subscribe. Now, Canada as a whole isn't really faring that much better, right? Because if you look at this trend line, it's also heading down, and it's led by Vancouver and Toronto. And if you kind of fall back to all the builders that are being put under receiverships, guess where they're starting from, right? It's not a coincidence. And the problem with this too? These numbers don't account for projects that haven't started construction yet, right? If you look at this chart here, yeah, there's a lot of projects in 2023 and 2024 that haven't started construction. Yeah, let's ask the question, why, right? It means that there's a higher probability than normal because of higher price inflation and all the other jazz going on in the economy right now that they may not even start at all and may get canceled, meaning we'll even have less supply, right? Because we already had 66 projects canceled last year. We got another 33 this year. And I really would not be surprised if we get more. It just depends on the timing of it. And all of this is going to mean that we're going to see the construction industry with lots of unemployment. These issues are going to bubble up in the economy because construction accounts for 8% of the Canadian GDP. Yeah. Again, I don't think we're escaping this recession, right? Because if you just look at RBC's latest GDP per capita trend chart I put over here, you can see that we are heading in the wrong direction and we're way too comparable to the other recessionary periods. And I'm putting recessionary in quotes because I feel like people are taking the word recessionary in a different way. And right now we're almost 2 years into this GDP per capita recession, where it's declining. And the question isn't that when are we gonna get the recession? It's when is this a recession gonna be official, right? And will they actually announce it? It's just right now we're just saying GDP per capita recession. That's all. So we have a lot of problems in general in the economy and also in the development space. So building of real estate. So why would someone like Kingsett, who has a large fund to lend to developers, want to lend to developers anymore? They won't, right? It'll only happen when there's a very, very clear picture that they're gonna actually make money. Dun, 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 right? Because at the end of the day, right, these companies are for-profit companies. Doesn't matter whether you like it or not, right or wrong, it's just fact. They're here to make money. So why would they risk their money if they're not going to make money or the outlook for making money is bad, right? So I really don't think we're going to be seeing a lot of pre-construction demand in the resale market anytime soon, right? Let alone, being able to build it, right? And the only time we'll probably see, demand for pre-construction is if the resale market, the buyers are tired of competing for condos. And just right now, it's not looking good because we're nowhere near the months of inventory we need to be to have multiple offers, right? We're at the highest months of inventory ever in the last decade, and we need to see below 3 months of inventory before we start actually even seeing multiple offers work properly, because some people still list it weirdly, so that, there's buyers who are looking at new build because they're tired of bidding on resale that has multiple offers, right? So we have a long ways to go in the resale market before we bring it back to demand for pre-con. And even then, if we have this new supply that people are going to buy in the future, this new supply is going to take 5 years from the day it sells before it completes. So I expect the inventory to slowly drop over time, over and very dwindle up, right? So the question, depending on whether you're a buyer or seller of condos in the Greater Toronto area, is this. What is your timeline and whether you can match what you're trying to do, like your desired outcomes, with the timeline on some of the supply that we can clearly see? It's like the writing's on the wall. That is the challenge right now. And if you want to chat about your unique situation, whether you should be buying, selling, or investing in this current space right now, you could do so by booking a call with me using the link that's on the screen right here. It's www.chatwithzen.com. Now, this only talks about the ownership side of real estate, and you want to understand how the rental side works when you have a lot of money sloshing around. Make sure to check out this video where $1.1 billion of Canadian dollars coming in from pension fund money is creating purpose-built rental in a time where rents are coming down. There's a lot of rental inventory, and a lot of stuff is still completing. So a lot of competition. So why would they do that? Make sure to stay tuned and check out that video.